Hey, it's Adam, Tracy. I wanted to make a quick point as it relates to offshore bank licensing and correspondent banks. And it's sort of fundamental, but it's a question that comes up a lot. So in really any offshore jurisdiction, there aren't central banks. They may call themselves central banks, right? But they're really just regulatory organizations, right? Like the U.S. Federal Reserve. The Federal Reserve is a true central bank. It dictates monetary policy. It has ultimate supervision for banks. It is the lender of last resort in terms of funding banks that are failing. And it, perhaps most importantly, is our clearinghouse, right? It maintains the payment rails. Everything. Bank wires, ACH, everything, right? It's monitored and controlled by them. So it functions, right, as a true central bank. Now you go outside of the US, EU, UK, etc., and they don't have that, right? And so correspondent banks become essential. So the question becomes, why are they essential in the context of offshore banking? And the biggest issue is that there's no central authority in these islands, right? Typically they're all islands, that monitor or control the payment systems, right? So the correspondent bank, or even in some cases an EMI, is that financial institution which plugs the hole that is left by the lack of a central banking authority, right? Again, like there's a central bank of the Bahamas, but it's really just a regulatory agency. It doesn't really have any control over, doesn't even attempt to regulate, monetary policies and the like. So that's part one. Part two is that nobody really wants to deal in the currencies that are prevalent in these jurisdictions where you get licensed, right? No one, there's not a great demand for the Bahamian dollar, the Cayman Islands dollar. They're pegged to the US dollar anyway, but you need multi-currency accounts if you want to be a functional bank, especially in an offshore context. So where are you going to get dollar, euro, pound denominated accounts? Again, correspondent bank, right? So those are the two primary reasons. It's that, and collectively, you could really describe it as, in an offshore context, well, you can get the license, and I've said this multiple times before, getting the license is actually the easy part, right? Getting the good correspondent bank, or banks, because it's usually more than one, is really the challenge. And there's no way, in the absence of a central banking authority, like a true central, like the Fed, to connect to the broader financial system. You could be a bank, right? You could get a license, subscribe to eBank and shuffle money around, I suppose, but you're going to have no access to the broader international economy, and especially the payment rails that govern the flow of money, and especially foreign exchange and multi-currency accounts. So that's conceptually where it comes from, right? There's nuances as it relates to compliance and other things, but you're dead in the water. You got a license, and you talk about like Comoros, right? Well, everybody's jumping to get these bank licenses in Comoros, and that's great. I mean, they're exceedingly easy to obtain, really inexpensive, but to get the license by itself, there's nothing you can do with it, right? Until you get that correspondent banking relationship in place and you can connect effectively to the broader financial network that sort of governs everyday life. So it's a quick take on the role of correspondent banking and the difference with true central banks. So if you have any questions, AdamTracy.io. Talk to you next time. Cheers.